These people who have money can solve a problem for the people that need money. And the people that need money can solve a problem for the people that have money. What if we create a community, a platform online where it solves a problem for each of these people?
A lot of real estate is about building relationships. One of the things that sets Private Money Club apart is this community. There really isn't another platform out there that does what we do. So if you need to put that lazy money to work, this is the platform to talk about.
Welcome back, everybody. Another week, another wealth webinar, joined here with Stephen Nagy and Mr. Andrew Chestnut. We've got something really cool for you. You know, we just wrapped up a very amazing event out at the Charlotte Motor Speedway. And no, we were not racing cars, but we were putting on the Private Money Club Money Tank, where we, for the first time, launched the 2.5 version of Private Money Club, which, in other words, you probably don't know what that means, brand new site. Brand new platform, brand new features, everything's new. It'd be like taking a car, looking at it and saying, nope, I don't like it. Send that one to the grinder. We're going to rebuild the car from the ground up and reuse none of the old site. And that's what we did. We literally took the car, we trashed it, which was the original, I think that was version 2.0 of PMC. We completely rebuilt the sucker from ground up. And now we're just going to keep making her go faster, handle better, and we're probably going to throw some turbochargers on her. Anyway, I'm talking about Private Money Club, the dating site for money, the only private money lending community where there's two people with money and people that need money. So we're going to talk a little bit about that, give you a quick demo, but we're also going to real quick talk about some really fun ways to get your money working. So let me ask everybody a question. I know we're kind of diving right into this, but I want to just take a step back. How many of you are here for the very first time? We got 81 people and climbing on. Who's here for the first time? Put I in the chat. Let's get a roll call here. I want to make sure I don't kind of run over the concepts, you know, for anyone that's new. Okay, great. Ralph, thanks for joining us. Shannon, we got Benny on here. We got, is it Yanni or Yoni? I used to snowboard with a Yanni Mäkinen was his name on Option NFA. So I kind of learned how to say that. That is, he was Finnish. I'm not sure, Yanni, where you're from, but we got Sally here, Tim for the first time, Troy Young, what's going on, buddy? Twyla, and then let's see, Vertus, Christian, awesome, awesome. So everybody in this community, say hello to everybody who's here for the first time. Got a bunch of newcomers. I love seeing that. Welcome, welcome, welcome. This channel, this show, we talk about money. That's what we always talk about. But we talk about how you can take back control of your money. And we also sometimes talk a little bit about this thing called BYOB. And it's called Be Your Own Banker, commonly known as the R. Nelson Nash's concept called infinite banking concept. So that's what we're going to talk about. But today I thought, just because we just got back from the Motor Speedway, just because we had something really exciting happen, we'd talk a little bit about private lending. So if that's a good place to start, Stephen, what are your thoughts? Do you think we should just dive right into private lending and talk about what that's like?
Yeah, absolutely. I mean, so Private Money Club, you know, Chris, if you maybe want to tell us, you know, kind of how it became about several years ago and what that's looked like. We've, you know, been through several iterations of it and keep improving, better. So we finally realized exactly what we need to have in place as far as the platform goes. We've gotten very good at building the community and building some coaching and education around everything, but the platform was still lacking. So about a year and a half ago, we set off on a mission with Andrew that you're going to meet here in a second on here and our entire development team to build an entire new platform from the ground up that allows us to control every aspect, data, everything else. So that way we can make literally the first true private money online platform in the entire country. And so we launched this thing last week, at least the first version of it. You know, the main launch is going to be March of 2025, but we kind of have this beta new launch of the brand new platform that we built over the last year and a half. And so we launched that last week, leading into Money Tank. Got a lot of really good feedback on it throughout the weekend up in Charlotte. And you know, it's a beautiful thing. So I thought we'd share it with everyone today. And honestly, the timing could not be better. And why do I say that? Because I look at the stock market. We're hitting all-time highs every day. Bitcoin's going crazy. But what are people like Warren Buffett doing? Well, if you watch Chris this morning on What the F Happened, Warren Buffett is still stockpiling cash. He's exiting positions. He's building more cash than he's ever built in his history of investing. And so why is he doing that? What does that look like? Should we be doing some of the same? Now, we don't want our money necessarily sitting idle. So where can we move some of this money, keep it safe, keep it growing for us, shorter term stuff? And for a lot of people, at least, that's where Private Money Club has been really helpful. So just want to kind of get into a little bit of that today, I think, Chris.
Yeah, so I guess I'll take everybody back. I mean, it's a short little story, so we got time. So how Private Money Club came to be is during the period of time we know as pandemic. Okay, I had lots of rentals. We came into the pandemic with somewhere around 90 plus doors, and during the pandemic, New York State, which is where all my rentals were, they basically put some things out there saying, basically not in these words, but I'll just tell you how a landlord would perceive it, telling the tenants, you don't have to pay rent. Like they can't kick you out if you don't pay rent. That was basically what they said. Now, at the first time when they said that early on in the pandemic, we sort of got a hold of all of our tenants. We were very proactive, asking if they need any help, any rent relief, let us know. We're more than happy to help them. But then no one really stopped paying there. It's when it got deeper and deeper into it, and the state kept literally saying it. The news kept saying, landlords have relief. If you can't pay your rent, essentially you can't get kicked out. So what do you think happened? They all stopped paying rent, which to me, I'm like, I'm not dealing with this. I was already at the tail end of real estate. I was just fed up with it. So I listed every property. I had tenants that wouldn't allow showing, so I gave them $500 in cash just to allow a showing on the weekend, and I got lucky and sold almost all the properties. We maintained and kept about 10 properties, but we sold the other 80, which meant I had a whole bunch of money. So now I'm thinking back to one of my mentors, Greg Herein, who said to me, he said, the ultimate in real estate is being the bank. Now, if I said that to you, the ultimate in real estate is being the bank, what's the first thing you think? You think, I need to have a lot of money to do that. I got to have this. I got to have that. I don't know how to do this. Well, all of those things were what I was thinking when I first heard it. But then all he said to me is he said, just reverse how you look at it. Everything I'm telling you about being the bank is the same as what you do today. You all do this, but you do it in the reverse order. When you have money, you deposit it in someone else's bank. Then that bank takes your hard-earned money and makes it work for them by lending it out. And a lot of banks lend on real estate because it's a very good collateral to have on the books. So they lend on real estate at usually about 80 cents on the dollar, 80%, and that's what they do. And then they get payments of principal interest back. So all he said is to be the bank, you reverse the order. But remember, everything you did to get a mortgage or a loan from the bank, what did they make you fill out? Personal financial statements, applications, you had to show all your financials. You had to go through all these hoops, underwriting and everything. So we said, you just do that. I said, all right, that's great. Where do I find these borrowers? Now, what I was looking for to be the bank, now that I had some money, is I was looking for the folks that were just like I was, the folks that had good deals, the folks that were knowledgeable about how to handle a private lender. So I was literally looking for a golden nugget, and I didn't find it. I went to RIAs, I put posts up on Facebook and Instagram, and all I'd get is a bunch of people that I would never in a million years lend money to. So I started searching and trying to find a place that I thought existed online where all the private lenders and the private borrowers would be, because there's got to be one place. I mean, there's places to go look for real estate. There's all sorts of sites for everything you could ever want. This has to exist. It didn't. So I was sitting with Steven after an event, and I was talking to him about it. He's like, yeah, I don't know of any one place. Like, there's Bigger Pockets, but that's sort of just a forum. I was talking to Andrew on here, and he's like, well, yeah, just Bigger Pockets in their forum, but it's not really organized. It's sort of just a forum where people post deals and maybe people lend to that. I'm like, yeah, but that's missing all the education. It's missing the steps. It's missing everything I'm looking for, because it's just what I have now. It's just a bunch of people like giving addresses out on deals. So here's what I drew, and I'm just going to draw it on this board. Okay. I drew a circle, and I drew two boxes on either side of the circle. And then I kind of just drew this line down the middle. Steven remembers this. And I said, Steven, when you want to make a lot of money at something, all you need to do is solve a problem for a lot of people. Now, every single one of you on here right now fit into one of these two boxes. Now, we're going to do a little exercise, and I want everybody to participate and everybody to listen carefully. First question in the first box over on the left, I always call this the heads. When you're looking at a coin, you got heads, you got tails, and then in the middle, you got the edge, right? There we go. So we're talking about this side. This side is all the people who have money. Okay, so you have money somewhere and you want to make more money. So if you are one of the haves in the chat right now, I want you to type in have. I'll wait a second. So first we're going to I'm going to show you there are only two types of people in the world, and we're getting the first one. So we got Mike, Boyd, I'm going to miss some of you. Yeah, it's coming quick. Yanni. So these are the haves, and I want you to pay attention. They're still coming in. Okay, well, hold on, Ken. We're going to get to the have-nots in a second, but there is no such thing as a have-not. There is just a need. Okay, so these are all the folks that have money. Okay, so everybody that has money just stood up and said, I have money. Make note of that. On the other side, we have people who need money. So again, there's no have-nots. There's only people that need money. If you're one of them, if you need money, put need. Look at Christian's already on it. Put need in the chat right now. I had money. It's all out working. Okay, well, that means your money's working, which is great. All right, so now if we were to take all these people and we looked at the haves and we look at the needs, both of them have a problem. The people with money, the haves, they want to make more money. Now, if there's any haves that put have in there that doesn't want to make any money, stand up and be counted, because I'm pretty sure all of you want to make more. And then there's the people that need money. The people that need money are all in need of money for an opportunity. They have an opportunity that they need money for so they can make more money. Does that make sense? Two people, everybody fits in one of those two boxes, and now all we need to do is solve a problem for each. Well, the beautiful thing about this circle is these people who have money can solve a problem for the people that need money. And the people that need money can solve a problem for the people that have money. So what we've got is a really freaking amazing thing going on here. And all I was doing is on a piece of paper, it was actually a napkin, I drew this to Stephen. And Stephen's like, that's brilliant. And I'm like, but wait, it's even better. What if we create a community, a platform online where it does this? Okay, where it solves a problem for each of these people. And we start talking about, well, what would be needed to do this? So the first thing we said is, all right, well, to do this, we're going to need education. Okay, because some of these people that have and some of these people that need, they don't know how to do this. So we have to do some education. And then I said, not only that, there's got to be a platform that makes it super easy for these people to communicate, share documents, share photos, appraisals, and all that stuff, and communicate in a very concise way, but not just concise, in a very secure way. So we got all this. Well, the first part we started, when we did this, just so everybody knows, we started beta 1. Beta 1 was on a platform you all probably know called Slack. We built a Slack channel, and I kid you not, it was perfect for this. The Slack channel allowed each of these two people to communicate. They could share some documents. There was a lot that still was missing, but we got deals done. There was tons of deals getting done on Slack. That's where this whole thing started. Believe it or not, there was no cost, no money. It was just kind of like this community. But then people wanted more. So we set off and we created version 1, and we called that beta 2. Okay, so beta 2 was an actual website that facilitated this. So we ported everybody from Slack into a website, and we started doing more deals. And more people started coming in, and it got better and better. And then we started providing training and learning and curriculum and all sorts of stuff. It was freaking awesome. That was then, folks. And today we're going to show you where we're at now with over 8,000 members. Okay, so we've gone from 0 members, or let's just call it 1, because there are 2, me and Steven. Okay, there was 2 people, and now there's 8,000, and we just launched a revolutionary new platform. But what I thought we would do today is really just discuss how this happens and the steps and the things you need to do to protect yourself. But then I want to show you how you can make money twice on the same dollar. Because if you're going to lend money, you typically would take money from a self-directed IRA, maybe a 401k loan, a HELOC, or a bank account. And you would lend the money and you'd make money on that deal, right? Let's say the deal's 12, you'd make 12%, and the interest would come back to the source. But what if by changing just one thing and adding one step, that same dollar that you lent before that made your money once could now make you money twice? And you did nothing different than change where it went. Would that be of interest? If that's of interest, put yes in the chat. It does. It flows very easy, Dennis. So let's just talk a little bit about this. So the first thing I'm going to draw over here, I'm just going to draw the places that you typically would lend from. Okay, checking account. Some of you probably would do a loan from a HELOC. Some of you might do a loan from a 401k or a self-directed IRA. Okay, you could take a loan from the 401k. And some of you might actually use something like a brokerage account or a money market. Various reasons to do each of these, but usually it's because that's where your money is. It's either in a checking account, a HELOC, a 401, because this is your house, right? Your HELOC is just the equity of your house. 401k, you could take loans from that. Self-directed IRA is just your qualified retirement plan, but allowing it to self-direct. And then over here, you've got a PMC real estate deal that you want to lend on. Now, real quick, what I'm going to do is I just want to show you something. Okay, and then I'm just going to pick a deal. And this wasn't pre-thought out or anything else like that. So take it for what it is. All right, so we're going to come over here into PMC. All right, so we got these. Now, I'm not quite sure why these folks did not put photos of their deals, but here's Bo. Okay, Bo's been in here for a while, so he's offering 16% on a fix and flip, first lien position, 50% LTV. I'm going to use this one, and there's 5 hours left on this deal, so somebody would have to get in on this pretty quick. 5 hours left. Here's his deal. Now, maybe Andrew can send him a message and say, hey, why are there no photos up there? I'd like to see photos. But I could just come down here and I can just message him and I could just say, where are the photos? Whoop, if I can type right. Got this little thing in my hand. Can you send me some pics of this deal? There we go. So I send that to him, boom. Now Bo got a message from me saying that. And I am following Bo. I can look at him. I can come in here. I can kind of see a little bit about him. Look at it. This little bugger is only 21 years old. How about that? But he talks about the different things he's doing. But I just want to really focus on Bo's deal. So he's got a long description of his deal. I'm not going to read it all today. But all I know is here's the important things, okay? This is what I want you to focus on. So the deal, he needs $100,000. So we're going to write that down. 100,000 bucks. Okay, he needs it for 5 months. What else we got? Steve and Andrew, you guys can blurt them out to me. He's got, let's see, loan amount 160 grand or the repair cost.
The term is 5 months, interest rate 16%.
Okay.
So yeah, loan amount, he needs 100,000. Repair cost is 60, and the final value after repairs is 200.
All right, so he needs 100, it's worth 200, and he needs 60 grand as repairs. So here's one thing that makes him extra special is he has a document. Whoops, not sure what just happened there. Download deal. Well, unless you read gibberish, that's not going to help me. But normally that would be the deal specs. Okay, so I don't know, something wrong there. But the things I want to know. So now here's the deal we're going to do. First thing, let's go up here and let's just, so anyone that's brand new, maybe you don't know what some of this terminology is, but that's what I want to cover. So first off, he's got a deal that pays 16%, which simple math means you just take the amount he's looking for, 100 grand, times 16%, that's $16,000, right? So that's how much money you'd make if you did it for a full year. He needs it for, let's just say 5 months, so just cut that in half. So he needs about, let's call it 8,000 bucks is about what you stand to make. The other thing that I love here is it is a first lien. Now, I want you to think about a bank, okay? A bank traditionally only wants to lend in first lien. That's their primary source that they want to lend on. Why? Well, just like Ricky Bobby said, if you're not first, you're last. And I truly believe that. I only like, me personally, and I'm not saying this is you, but I only like to lend in first position. I do not like being behind a bank because then if a foreclosure happens, I got to basically make sure that that bank gets satisfied before I get anything. Not only that, I got to make sure that the bank doesn't foreclose on the property before I get my claim in. So second position just makes things a little bit more difficult. First position, love that. But the other thing I really like about this is we are only lending 50% LTV, loan to value. That's what LTV stands for. So if the value of the property is 200,000 and he needs 100, we're only lending 50%. Now, real quick, I'm going to challenge everybody here in the chat. I want everybody to tell me what are the first questions you're looking to ask Bo. So let's just put them in. Okay, let's do this together. Questions. Let's figure out, like, what are the first things you would ask? I'm going to kick this off. First thing, is the interest paid monthly or at the end of the deal? Would you do monthly interest payments? Okay, question number one. What else, folks? What is the second thing you want to know? Tess said she wants to see comps. Okay, I'm going to say, do you have an appraisal? Comps, and do you have an as is and as complete appraisal? Okay, so there we go. So I want to see comps so that I know what are other properties selling for around this one. Now we have software where we could pull the comps, and everybody that's part of Private Money Club can have this available to them soon, but also you could just ask the borrower. Okay, who's doing repairs? I love that. They're coming in quick. Who is doing repairs? And do you have a scope of work you can share? See how I'm doing this? I'm just asking questions here, folks. Same questions a bank would. Oh, I love that. Arthur said, will you do a personal guarantee? List me on insurance. Can I be additionally insured on the, we'll just call it homeowners, okay? Let's see, detailed repair spec, we got that, Boyd. Personal guarantee, comparables, let's see. Oh, do you visit the property regularly? Okay. Will you be doing any of the work? And let's do this. And is the property in your area so you can visit and manage? That's a big thing. Sorry, that's a bit of a run on there. Let's see. Are there fees I have to pay to receive my interest every month? So Dr. Cheryl, I would never ask that, but in your rare circumstance, that's a unique one. So normally I would never ask that question that Dr. Lentz is asking, because she's saying, are there any fees to pay or to have the pay and receive my interest every month? So in other words, we just found a deal recently that she got into that she had to pay a fee to get a wire for the checks every month, like the interest checks, which is weird. I probably wouldn't ask because I know that's not the case. And even if it was, I would say, you're paying that, man. You're the borrower. Let's see. Some may want to know if there's, let's see, brought down multiple. Yeah, okay. So we could ask, can multiple lenders come into the deal? All right. So I'm just going to send this. All right. So those are the questions. Now, there might be some more, but I'm trying not to burn up too much more time. So what we just did is we asked Bo on this deal some critical questions. We wanted appraisal. We wanted a scope of work. We asked if he would personally guarantee it. We wanted to know if interest payments could be made monthly. We wanted to know if there's an extra cost to get the interest payments done. We want to be listed additionally insured on that. And we want to know, are you local to this deal? Great. So those are good questions. And there's probably some more that you could do. And there, we've got the deal right there in the content. So promissory note and mortgage deed of trust. All right, Albert, we're going to cover that in just a second. So I'm going to stop sharing my screen because Andrew's going to do a really good demo of the site and show you more about that. I just wanted to use that. So now we got all these specs here. Okay, so now let me ask all of you where you would lend from. So put it in the chat. How many of you would lend money from your checking account, your home equity line of credit, your 401k or self-directed IRA? If you did your 401k, it would take two of you because the max we can take as a loan is $50,000 or 50% or your money market. Now, each one of these places, if we were to lend on these, every one of them, we're going to make money one time. Because if I take 100K from a checking account that was paying me 2%, and let's say I have 100 in a checking account and I take 100 grand to lend, how much is the bank paying me? Zero, because I got no money in the bank. HELOC, if I take 100 grand out of the HELOC, they're going to charge me about 8%. Okay, but now I got 100 grand making 16%, so I'm still making a spread. So I'm making a spread of 8. Not bad, okay? But I'm only making money one time. 401k and self-directed IRA, if I take a loan for 50 grand from the 401k and I do that, I'm making money on the interest, but I have to pay interest. So technically, some of you could argue that you're making money 2 times here, okay? So we're making money twice, but it's a little different, so I want you to understand that. So the 401k could work. The self-directed IRA, you're making money one time. And the money market, same as the checking account. So all of these allow you to make 16% one time. with the exception of maybe the 401k if we really want to go into that. I didn't plan on doing that. So what are some of the things we would first off do in this deal before the money ever left our account? So let's just draw a line like this, okay? And let's just talk about some of the rules of engagement. So the first thing is we're going to want to find an escrow agent. Now, the borrower probably has one of these since he's a realtor. An escrow agent's usually going to be a title company or it's going to be an attorney. It could be your attorney or their attorney. So if any of you are taking notes, this is the first thing we want to establish. Never, ever, ever, ever should you lend money on a deal and send it directly to the borrower. The money always goes to a third party, and I'll actually write that, third party escrow, okay? Because we need to get some things done before they get the money. And this is a huge mistake people make. And listen, I'm not telling you that on Private Money Club, there's not some people on there that are probably trying to get you to send money directly to their company. Because they over here, they're borrowing this money inside of a company name. So they'll probably just say, okay, well, just wire the money over to our company. I sent you the wire instructions. The answer is always no, no, no. I'm going to send the money to a third-party escrow. I would prefer to use my attorney, and my attorney is going to structure the next thing that we need, which is a note, a promissory note, which is going to spell out the term, 16%, the duration, which is 5 months. If he goes beyond 5 months, like what happens, the extension clause, it's going to spell all the rules out, okay, the rules of the deal. I want to be very clear about the note. It's commonly referred to as a promissory note. The note does not hold up in court. If you get a signed note from the borrower, you're flying blind. You are literally not secured by anything. It just spells the terms. And people, for some reason, like they think that this is all they need and this is going to hold up in court. This isn't going to do anything. You can sue them, but you're probably never going to collect because you have no collateral at this point until the escrow agent or the attorney or you structures the mortgage. Now, the mortgage or deed of trust is single-handedly one of the most important, okay, I thought I spelled it wrong, is one of the most important things because this is where you take collateral. Now, when you did a mortgage with your traditional bank, the mortgage and the note were combined, okay? They're like one document. But here, they're going to be two different documents, okay? So now we've got a note and a mortgage. Now, here's another rule. If any of you are taking notes, you can learn all this from the PMC Accelerator course, or we do a thing called Quick Start every Thursday at 1 o'clock. He goes over this stuff all the time. Noah is the coach, but I'm just giving you quick highlights. So when we lend this money, we are always, always, always lending in a commercial capacity. Do not lend money to an individual. I just had this happen at Money Tank. There was a person that presented a deal, very good deal on Money Tank. And at the end, I said, I'll fund it. I literally raised my hand. I liked the deal. I said, I'd fund that deal. But when I talked to her in the back, I found out the deal wasn't owned by her, it wasn't owned by her company. It was owned by her. And I said, we have to move this property into an entity because I cannot lend to you personally. So we got to lend to an entity. Otherwise, there are some rules that we're going to break. But number one, third-party escrow. Number two, they're going to establish a note, a mortgage. So once we get all of those, what can happen when the note and mortgage is filed? The money can be released to escrow. Okay, then the other things that we're going to want to do before the deal closes, we're going to want to make sure that we're on the insurance policy as an additional insured, especially in light of all these hurricanes. You know, Stephen lives in a hurricane area. Many of you do too, and tornadoes. It's been kind of crazy, right? So just yesterday, I interviewed somebody on my podcast. They had a 92-unit apartment building in Louisiana. It got directly hit by the hurricane. The insurance company said, we're not paying. We don't cover hurricanes. They had to sue the insurance company. The insurance company, 2 years later, paid out a little bit. Not much, but they had to sue them, which means there's legal fees, 2 years of carry costs, 2 years of vacancies. It was like literally a couple $1 million of damage from this hurricane on this 92 unit. So like first and foremost, if you're the lender on that deal, do you want to get your check from the insurance company or do you want to get your check from the person that borrowed the money that just lost a 92 unit apartment building? The insurance company. Yes, in this one, the insurance company kind of fought it. So here's one extra step I would say. If any of you are lending on a property, that is in an area where it potentially could get hit by a hurricane, call the insurance company, ask for the insurance company they're going to use, call them and ask, is this covered against floods? Is this covered against hurricanes? And is this covered against tornadoes? Because now in Florida, you got to worry about all three of those: flooding, hurricanes, and, well, Stephen will tell you, these little buggers pop up out of the ground and out of the sky all the time called tornadoes. Funny little things. But you want to make sure you're covered for that. So you got the insurance covered. So what else are we missing here? The only other bolt-on things, because you might want this, a personal guarantee. You might want to ask the borrower for a personal guarantee. So we could do that. You might want to ask for things like an appraisal, okay, so that you can do this. You might want to set up a draw schedule for the rehab. So he needs 60,000 of this 100 is for rehab. Okay, so we might not want to give him the full 60,000 up front. We might want to set up with the escrow agent, the 60 grand goes into an account, and when he basically does the work, we reimburse him. I'm just giving you different ideas. So all of these are just the basic things you would want to make sure are set up. And all of these things are things that we teach in the Accelerator course, and he also covers these in the Quick Start, which Quick Start's free. Accelerator is a paid coaching program, just so you know. We'll talk about that in a second. So any questions up to this point, Stephen?
Just one thing to point out, actually, good thing Albert asked. He said, if a person has an LLC, is that still okay to lend to them? And just I clarify, maybe make it, you should only lend to an LLC, actually. So correct.
Yeah, LLC, S Corp, and an LLC could be an S Corp.
Yeah, just never an individual though.
C Corp. Yeah, just don't lend to an individual. Good question.
Yep.
Okay, so we got all of this. Andrew, did I miss anything there?
What was the second bolt-on they said? Personal guarantee, draw schedule, and what?
I just said you might want to ask for an appraisal.
Yeah.
And what I mean by that, like you could ask them for an appraisal at the beginning, and then you could midway through the deal when the renovations are getting done, you could ask them for another appraisal, but you'd need to make sure you specify that up here in the note.
Not an appraisal. You'd look for an inspection, because that's how draws work too. I think it would be an inspection. So like in the middle of it, let's say you do 50% of the work, an inspector comes out for like a couple $100 and says, yep, they actually did what they said they did. So if you're doing a draw schedule.
And this would be a home inspector that typically would do this.
Yeah, so Lois was asking what a draw is. So a draw means if you're going to lend like $100,000, you can lend it in pieces. So maybe you say, hey, I'm going to give you 25,000 of the 100 up front, and I'm going to give you the next 25,000 once the first quarter of the work is complete. So maybe they're doing a roof, they're doing windows, they're doing kitchens, and they're doing bathrooms. Well, maybe you give them the first amount when they do the windows, and you give them the next amount when the roof is done, then you give them the next amount. So you're kind of giving it to them in pieces as they progress through the total job. Rehab. So that's what a draw schedule would look at. And then Andrew just saying, having an inspector go out to check the work and make sure it's done properly, that kind of thing. I mean, there's no right way to do it. It's just all the negotiation on how you feel protected as the lender there.
Yep. This is really smart right now. Doing the draw schedules. I like this. I have not done this, but I've been lending to the same people for a while. So I trust that they know what they're doing. But again, sometimes just take trust out of it and just say, all right, if you need 60K is going for repairs and you got the scope of work. So if you've got the scope of work, what that's going to do is it's going to show you all the work. And then you just say, okay, if I advance 20,000 at closing, and that does roof, windows, doors, all the big stuff, and then that's what we allocated the 20K for, great. When all this is done, the borrower goes to you and says, hey, we're ready for the second draw for 20 grand. What you would do is you would send out a home inspector at the borrower's cost. The borrower pays for this. A home inspector comes out and verifies the roof is done, the windows are done, the doors are done, and also permits were pulled. So you want to make sure that permits were pulled for the stuff that needs permits. And then once all that's done, you could advance the next 20. And you could do it either advance or you could do reimbursement. You can make the borrower fund it and then you reimburse them, or you could just advance. I would do the advance. That's how I do it. And then maybe this is drywall, electrical, plumbing, right? And so on. And then when it's all done, you send each step, like if there's 3 draws, you just send a home inspector out to verify that. And there's actually a company in PMC, it's coming soon, that does all that for you. So they'll basically do it all for you. We don't have that yet, but it's coming soon. Okay, so trust. Someone asked about, what about a trust?
Yeah, lending to a trust, so you can only lend to corporation.
I would not.
Yeah.
I would not. Yeah.
And then the other one, can you explain a little bit more about a personal guarantee? Like what does that look like? Is it just a signed document? Is it an email? And then what makes the personal guarantee binding?
Andrew, you don't have that handy, do you? Do you have a sample personal guarantee?
I don't have one off the top
Okay,
of my
no big
head.
deal.
Let me go to it's usually just a clause in the note that basically says, look, if I don't pay the bill, I will, if my company doesn't pay the bill, I'll personally pay this. And so it transfers it transfers, what's the word? I'm playing that
Liability.
wonderful game called Let's Figure Out What Word Andrew's thinking about. It
Just
transfers
liability.
the debt over. So instead of being on your company, now it transfers over to you personally so that you have to be in charge of it. So, yeah.
That's a good question. Andrew, is any of this stuff covered in the contract training, the certification?
I'd have to go back and take a look at it. As far as personal guarantees are, the intro to contract law doesn't include it because it's just basic contract law. But I think it is included in the certifications. I have to go back and double check myself. It was a while ago. Yeah.
Yeah. So when you did your primary mortgage, whoever asked that about the personal guarantee, strong probability that you signed a personal guarantee, which is why the bank asked you to fill out what's called a personal financial statement. They wanted to know what your assets looked like. So you would do the same thing. You'd ask them to send you a personal financial statement, which there are sample ones on Private Money Club that the person can use. They'd fill that out. So now you know how much money they have in the bank, how much they have in retirement accounts, how much they have in brokerage accounts, how much cash value life insurance they have, what are their debts listed out, what is the equity that they have out of that. So assets minus liabilities gives the equity. So now you know what they look like on paper, but don't ever just accept just the personal financial statement. Ask them for supporting documents. If they say they got 50 grand in the bank, prove it. Send me a copy of the bank statement. Send me a copy of the 401k. You can black out the account numbers. That's perfectly fine. Send me a copy of your brokerage account. Send me a copy of a policy statement showing you got the cash value. I just need to make sure what you're telling me you have, and then it's just a simple document. And the personal guarantee, the attorney or title company can do that. And a lot of times they'll just bump it right onto the mortgage in the note. And then they're signing personally guaranteeing the loan. Okay. Any additional questions before we move on to the next part? Exactly. Boyd just nailed it. Personal guarantee is more of a clause in the contract, a note. Yep. Just like Andrew said.
I mean, a typical real estate contract, your collateral is the property. So the recourse is to be able to foreclose and take back that property. And all a personal guarantee is basically saying is if that property, doesn't cover the amount that you lent for whatever happens, and they're personally liable. You can go through their personal home, their personal accounts, their personal investments and things. So it just gives you an extra added layer of security if things do go wrong on that deal.
Yeah,
and we
Dr.
talked a lot
Cheryl.
about like asset protection and using Wyoming corporations to do asset protection. This bypasses that, so that way you get an extra level. So just to kind of put that out there as to why we would do a personal guarantee, stuff like that. Yep.
Yeah, great. Yeah, Dr. Cheryl, that what they both said sort of answers your question. And then Christy, I'll do one more. I had one borrower who reduced the interest rate paid with a personal guarantee without the guarantee. Yeah. So Christy, what Christy's saying is a lot of borrowers will pay more without the personal guarantee than they will with the personal guarantee. Because if they're not personally guaranteeing it, the only risk the borrower has is the assets of the company. If the assets of the company are just this property, this would be a good one because he says the property's worth 200 and we're only lending 100 in first lien. So that's pretty good. But we'd have to get an appraisal or comps or a BPO to prove it's actually worth 200. Like, listen, as we kind of go into this next phase, with the market in the cycle we're in, start doing extra due diligence. I mean, me and Brandon are like ripping deals apart. We're literally, I just made a borrower who wants to borrow, you guys will laugh, $15,000. That's all he needs. So most of you would be like, he only needs 15 grand. Do I treat a deal that somebody wants 15 grand any different than I treat a deal that somebody wants 500 grand? No difference. I made him spend $750 getting an appraisal, redoing his title policy. Literally, he was kind of pissed. He's like, I'm only asking for 15 grand. I said, do you want the money or not? That's all I said. I don't have to answer anything else. It's not like we're buds here. Like, I'm just lending you money. So set your rules, folks. Do not break the rules. Don't be like, he only needs 5 grand. No big deal. Yeah. Where do you want me to send? I can afford. You're basically saying I can afford to lose $5,000. You can't afford to lose any money. None of you should want to lose any money. So just follow the rules. But I love that somebody said with the personal guarantee, they would pay less than they would without. And that makes perfect sense. Without the personal guarantee, they're only on the hook for what the company owns, which is the property. And if you're the lender and funding the majority of the property costs, like, what's the borrower care? Just take the property. No skin in the game outside of time. But now if they've got personal guarantees, that means now you're going after their personal assets. I'm going after your car, your Porsche. I'm going after your bank accounts. I'm going after your 401k. I'm going after it all, buddy. They don't like that. So makes sense.
Breaking news, this just in. Are you sick of having your money lying around not doing anything? Well, we've got the solution for you. PrivateMoneyClub.com. Back to you, Chris.
Let's go one step further. So now that we've got all this, now we're going to do the same deal. Okay, so I'm just going to redraw the same deal over here, and we're just going to do this again. But now what we're going to do is we're going to change where the money goes first. So we got this BOW deal. Okay, it's a PMC 5-month deal, 16% interest, $100,000 loan. I already talked about all the places you could lend, but now let's just say, and I'm just going to go from checking account. You were going to lend from the checking, but now you're going to change where that money goes, and we're going to put it into a specially designed and engineered whole life policy, okay? So now let's just talk about how this deal works. We very rarely ever pull up numbers, but this is my buddy Speedy Gonzalez's policy. I'm just kidding. We changed the name. And this person dumped in 100 grand, okay? So this was perfect for this example, and I kind of planned it this way, which normally I don't. But let's just say you had 100 grand in a checking account. You were going to do this loan, but you decided a while ago that you wanted to make money twice on the same dollar, okay? So what you're going to do is you're going to change where the 100 grand goes first. So let's kind of do this here real quick. The dump in is $100,000. Goes from bank account into policy. Now, in order to make this deal work under IRS guidelines, Speedy Gonzalez is going to have to put $11,000 a year into the policy in premium deposits. Now, they could do it any which way. They could do it as a lump sum. They could do it just by doing monthly. Doesn't matter, because I mean, monthly on 11 grand, now I'm curious, is about 916 bucks. So to dump in 100 grand, they have to continue saving $916 a month. Okay, that's basically what would be required. So now in the first year, we got 111,000 in the policy. How much do we have that we can take out? 101, 91.74%. Some of you, when you're looking at this, or anybody that's looking at why would I do that? I had 100 grand in the bank. Now I only have 90, or now I only have, I had 111 in the bank. Now I only have 101. Where'd the rest go? Right here, your death benefit. Yep. So $1.3 million now protects you in the event of you dying. That's right. And what was the cost for that? Well, about just under 9%. Okay, so 8.25%, we'll call it, was about that's what it cost you in the first year. Now, some people don't like that, and I get it, but you're playing the short game if you don't like that. First off, all of you, I think, have someone in your life that you care about, somebody in your life you love, spouse, family member, child. If you graduate too early, we now put protection in place of 1.3 million. No one has a loved one that would be upset about getting this, even in the event of losing you. That would help them. So there's a cost for that, and I'm just calling it right out. And I'm going to start doing this because I hear a lot of people when I go to these events. I was just in Ohio speaking at this event, and I swear to God, every day I thought I was going to puke. Every day, not because I was drinking too much, not because I had the flu. I thought I was going to puke because I can't even fathom how many people came up to us, asked us what we did. They said, "Oh, that's that whole life thing. I don't want any," or they started asking and they were like, "I don't want any death benefit. I don't need any death benefit." Oh, now there might be a couple reasons why they'd say that, but for me, that immediately in my mind means that this is not the type of human being I want to deal with, because this human being doesn't care about anybody but themselves. And that's just not a good fit for me. But anyway, now let's kind of look at this deal in a second, because now I want to go to the next year. The next year, all you save is the $916 a month, or the $11,000. So we put 11,000 in. How much can we take out? 11,729. That means we made 6.63% on our money. Now remember, in this policy, we're going to have a loan interest rate. So if we take money out, which we're going to get into in a second, if we take money out, we're going to have a loan interest rate of about 5.2%. And they vary. They go about 5.2 to about 7% at the highest. But we're just going to use the 5.2 one here, okay? So now if you made 6.63 this year and you took all this out, you took $11,000 out, you're still making interest and dividends on this money like it never came out. You're still making 6.63, but we got to give back 5.2. So essentially you're making a spread of 1, but you still lost, we'll just round it up and say 9% the first year. You lost 9, but we just make back 1. Okay, so now we make back 1. I'm accounting for the insurance company charging us interest. Another year goes by, you put 11,000 in. You could take 12,000 out. That's 12%. What's 12 minus 5? That's 7%, right? About 7%. So remember, the first year we made 1 spread. That's the spread, folks. We made 1% spread between the cost and what we made that year on the money we deposited. The next year we made a 12% return, 12.2. We gave back 5.2, so we made a 7% spread. Okay, so how much have we made back in these 2 years on the monies we've deposited? 8% spread. So we essentially have made back the 8% that we did not have access to. Now, by the math, we could keep going, but I'm just trying to show you how you would calculate this. So now as it keeps going, it just gets better and better. 13, 13, 7, 14, 15. Here's your return, 40, 32, 25. We're doing the cash on cash return for every dollar we're putting in. So what I'm trying to explain by showing you this is I'm trying to explain to you that in the beginning, you're going to lose money by putting the money in the policy. But over time, you're going to continuously make more and more and more money because it's just math. And you're going to make more money whether the money's in there or not. So now what we're going to do is we're going to do the math. The first year, we're going to take $100,000 out immediately. We're going to put it in. The second we put it in, like within the first 30 days, we're going to take $100,000 out. The insurance company is going to charge us 5.2%. So all the same rules. Remember, I drew all that stuff in the middle. We've got the escrow agent. Okay, we got the third-party escrow agent. We got the note. We got the mortgage. We got the insurance policy. We got the personal guarantee. We got all that stuff all done because you already learned how to do that. But now we got $100,000 in the policy that we're going to take out. We're going to take that 100 grand and we're going to lend that. Remember, I went right through the escrow agent. See how I did that? I stopped here. So the 100 grand goes to the escrow agent. Escrow agent gets the note, check, got the mortgage signed, check, insurance policies in place, personal guarantees in place, all the things, everything gets recorded, boom. Escrow agent now releases your funds after they've done their checklist and puts the money into Bo's corporate account. So Bo now has 100 grand. Okay, so first off, let's do the math. $100,000 loan at 5.2 cost you $5,200. I'm just going to do the math. This will be easier. Normally I would ask you all to do it, but over here, we're making $100,000. We're making 16%. So that's $16,000 we're making. But we're really not. It's, you know, can I just keep this simple, folks? I know it's a 5-month loan, but is it okay just for the example of this if we just do 12 months? Because it just makes my math simpler. Can we do that? Does anyone want me to break it down by the month? I can. It'll just take a little bit more time, and I want to give Andrew ample time to explain it. Everybody okay with that? Just give me a yes. Anyone not okay with me? Okay, Tess said yes. All good. I just want you to all understand that it's a 5-month deal, but what I'm now doing is I'm just doing it for 12 months, just for simple mathematics. We made $16,000, okay, on the interest, but we had to give back $5,200, okay? So we make a net of $10,800. I want you to all just remember that. We made a net of $10,800. So now we made $10,000, but some of you are like, but hold on a second, Chris, I would have made $16,000 if I did it in the bank account. So let's do a little tally over here, okay? So if we made 16, let's do the math, minus 16. So we are $5,200 less, so this is our tally, $5,200 less using the policy and doing it this way. Because if we lent using a bank account, we would have made 16,000, but now we only made 10,800, so we lost $5,200. Everybody's tracking? But now what we're going to do is we're going to find deals every year because Bo pays this deal back. The 100,000 comes back, you put it back in the policy. So now your policy's got 100,000 and is growing the next year. So the second year, we now have 113,000. We're going to do the same thing, but this year we made 1,007. So now we're going to do the same thing. Just keep doing this. It's going to be another 5,200 in interest. Okay. So now we had 10,800, but the second year we made 11,729 minus the 11. So we picked up an extra 729. So remember, same math. 10,800, but now we're going to make an extra 729. So we're going to add 729 over here. I've never done this before, so I'm just going to kind of figure out how long does it start to take where this becomes advantageous. Don't forget, if you die, there's a $1.3 million death benefit. Okay. So we're just going to keep going here. So we just added 729. Third year, we're going to do the same thing, but now we're going to.
Chris, while you're pulling that, just somebody asked, like, hey, I had $100,000, but the insurance company would not let me dump it in to a policy. What company do we use? So what we're talking about is real fast, Tim, while Chris is adding that up. We designed, specially designed and engineered whole life policy specifically for the infinite banking concept. So we do have a half a dozen insurance carriers, some of the largest mutually owned insurance companies in the country, actually, that allow us to do this. And some of the companies actually allow us to do this, like only us, because of how much business we do with them. So there is a little bit more to it. You have to understand exactly what's involved with MEC limits and all the rest of it. So that's what we do all day, every day. So as Boyd said over in the comments, I'll post a link. If you want to schedule a call with one of our money mentors, we can give you a little bit more specifics, talk you through this and exactly how you can do this yourself. Sorry, Chris, go ahead.
That's okay. That gave me a second to kind of just regroup and get my math going here. So all I'm doing, folks, is I'm assuming, just so you all know what I'm doing, I'm assuming every year we just keep doing the same thing, keep lending the money out, keep lending the money out. Now, what I'm trying to calculate for you is I'm trying to show you where you close the gap on making more, because now we're a couple of years into this deal and now we got to keep going. So now we're getting super close. And I think I got it right here. Let's just do the math. Remember, we were down 5,200 the first year. So how long did it take for me to get all that money back? 729 minus 1342 minus 2,000, 11. So it would be 1, 2, 3. So in the 5th year of doing this with the policy, you are going to be positive, but you're going to be actually above positive in the 5th year, because your 5th year you made 2,770. Yeah, so you're actually in the black now. But it took you 5 years. It took you 5 years of doing this from the policy to make up and beat what you could have done with your bank account. Now, let's talk about whether or not that would make sense. In a bank account, you didn't have a death benefit, first off. In a bank account, your money is not working for you when it's lent out, but we already covered that because you made 16,000 and in the policy you only made 10,800 because you had to pay the insurance company money. So it took 5 years for you to for this to make sense using the policy versus lending from a bank account or a money market account. But what happens after that? Now, after the 5th year, no matter what you do with this policy, you are absolutely crushing it. So in the 6th year, you would come out. Now, let me just say this here. I'm just going to go one more page because I want you to see this. Folks, I'm doing this by the math. So it took us 5 years. In the 6th year, if you did the exact same thing and you made $16,000 on that loan, you would have came out making, here, actually, I just want you to see this. So if you don't mind, I'm going to share. I want you to see how I'm doing this so you don't think I'm trying to pull a fast one on anyone here. So here we go. 6 years in, here's the math. You put 11 in and you made 14. So what did we make? $3,592 net of cost of insurance. So at this point, you have a $1.4 million death benefit, net of that, net of any commissions that were paid to the money mentor, net of any policy service fees, which this company is $50 a year. All of that is netted out because a lot of people are like, oh, all those fees. We cannot show you these numbers without accounting for the fees. Those are all accounted. Okay, so we made $3,592. So remember, in that other example, you made $16,000 from a bank account, but now we made $16,000 from the lending deal on the $100,000, but net of loan interest rate, net of everything else, we come out on top and we make $3,592 on top of that because we already closed the gap on what we lost in those early years. So now that's what we're making. $3,592 plus the $16,000. So you got 5, 6, 7, 8, 9. Unless I missed something there because I'm doing this on the fly. You made $19,592. The person that lent from their checking account made $16,000. The next year, it would be more because now it'd be $4,461 on top of that. So now you make an additional $4,461 on top of that. So every single year that you do this beyond the 5th year, you are coming out ahead. See, it's tough because I got 11 and now it goes to 92. So now after this point, when we drop the term, you're actually making way more because now we got to take 16. Let's just do this year. So that's year 8. If we take the 16,418, which is this number here, that's how much money you made. And we subtract the 9205 that you put in minus 9205. That year alone, your spread, the amount you made in the 8th year, would be $7,213. Now, I know that's a lot of math. And I know some of you are just like, that's too much math. But what I wanted to do, because I don't feel like I do this enough, is I just wanted to show you how it takes time. It takes time for this system to make sense in private lending. We just did the math. It took 5 years for this to be more advantageous than lending from a bank account. 6 years, or I'm sorry, 5 years. But if you're playing the long game and you care about your family and that death benefit is of importance, this isn't even a decision for most people, because most people look at it and say, well, I'm going to live 20 years. So that means now for 15 years of my life, I've got a tailwind of compounding interest benefiting me. And no matter what you borrow or whatever you buy, whatever you lend on, like this is the benefits of using the policy. But it took us 5 years. Any questions on that? Yeah, I was trying to calculate all that in. So John said, did you include the interest and dividends at the insurance company? Yes. So let me show you that. It's a good question. So did I include the interest and dividends from the insurance company? Yep, here's the dividend. So each year, this column right here, the interest is baked into the cash. So here's your cash value. So this cash value is a combination of guaranteed interest plus dividends. This company, I believe, is 5.75%. That's their dividend crediting rate, which is the dividend plus the guaranteed interest. Okay, so that was all factored in because the only number I was using to show that was this, the projected cash on cash growth per year. You put 11 in, you could take 1172 out. Okay, that's what we were doing. Good question. Any other questions on that? Now, after the 5th year with the policy, you are crushing it. Correct. And all we did there, folks, and I know some people like math, some people don't. All we did there is just showed, I just went through, year by year to show you the mathematics. Now, I might have missed a number here and there because I did that fast, but for the most part, I think we got it right. Stephen would have probably called me out if I didn't do it right, and he would have said, nope, that's not correct, Chris. Go back and do your math. And Money Tank, this is interesting, and I got to call him out if he's on here. Drew on our team, I'm up front, I'm doing an example, I'm doing the math, we're showing it like that, and Drew from the back of the room says, no, that's wrong. You actually made more money. So he actually said that the policy made more than what it did, and he said he did the calculation. Now, from the front of the room, I'm talking to 100 people. I'm just like, okay, maybe Drew's right. Later, Drew texted me because I kind of felt like an idiot up on the stage. I'm like, wow, I did my math wrong here. Later, Drew texted me and he says, hey, Chris, I've been thinking about the numbers and I think you were right. So I think I'm usually pretty decent about doing that. Andrew, I want to kick this over to you because now we just saw how by changing one thing and adding one step, we can make more money, but it took 5 years to do that in a private lending situation. Let's talk to them about what Private Money Club can offer them and how it can really, really change the game when it comes to private lending.
Absolutely, we can, because it is part of what Chris was saying. Private Money Club can be part of that as well. So if you need to put that lazy money to work, this is the platform to talk about. And as Chris was talking about way earlier on the show, there really isn't another platform out there that does what we do. We're really blazing this new trail, if you will, on private money lending and really revolutionizing the way that we do this. So without further ado, I want to get into Private Money Club and the newest version of it. Again, we really rethought this platform from the ground up. It's taken us about 2 years to go through it. And so it's really, we put a lot of time and effort into making it as easy as possible to use. So let me go into it here and we'll start off. When you first log into Private Money Club, the very first place it's going to take you is to our community. One of the things that sets Private Money Club apart is this community. We want to make sure that people know who everyone else is. We want to make sure that you guys get to know each other. A lot of real estate is about building relationships. For example, I know somebody who needed a really quick loan. He needed to close this loan in less than 24 hours, went to his lenders who had already lent him money before, had a really strong relationship with this person, said, hey, I need $120,000 in like 12 hours. Because he had built that relationship, he was able to get that money wired over and ended up closing a really difficult deal. he did that because he met people and he networked, and that's what this community is meant for. This is really different than it was on the old site. The old site used to be the public forum, and you kind of was a free for all, and it was all right, but some of the functionality was okay. We've really rebuilt this from the ground up. So community is a collection of groups. If you're a Premier member, you can create your own groups. Otherwise, we have some default ones that we've created for you, like introduce yourself. And I recommend the very first time you're on the platform that you go to the introduce yourself group and introduce yourself. Just let everyone know who you are. Sort of the first place you should start. So again, if you're a Premier member, you can create your own groups. We've got a couple here. I think we have one that was from New Jersey. Let me scroll down here. Long-term lenders, syndicate. We got New Jersey funding. We've got some people who have started their own groups as well. So everything is posted inside groups. There are some public groups, there are private groups as well. So you can use groups for things like if you have a series of lenders that you already usually use, you could create your own private group for that too. Again, creating groups is for premiers. Inside groups are going to be a variety of posts in it. We will also post, so you can see that we've got some folks in here who are saying, hey, we're here, just letting everyone know that they exist. We do have a group for the Money Club Monday. I'll use this one next. I just posted all the replays for Money Club Monday from the old site. That's why you'll see a lot of those here. Inside groups, I can post events. So you can see the upcoming Money Club Mondays that are coming here will be posted inside of event. If you have questions about it or need copies or need help getting links, various things, you can go inside of events. You can also go to the events page where all upcoming public events will be shown. So that's the community itself, and it's really meant to allow you folks to be able to go in and chat with people. If you're in the Accelerator Coaching group, you've got your Accelerator Coaching, you have your own group. And if you have PMC certifications, you have your own group as well. You can ask questions of us. I want to talk a little bit about the certifications because we kind of alluded to them a wee bit earlier. If you notice next to my name, I have this little badge here that says I'm Premier. Premier and Premium are the same thing. We're getting it changed over on the site. Just want to let people know it's the same thing. So we're normalizing the terminology. If I have a little red checkbox, that means I'm a certified lender. If I have a little purple box or a checkbox or check mark, that means I'm a certified borrower. The certifications are designed to give people a base level amount of information to become a good borrower, good lender. So it's meant as kind of the foundation. Then you're going to build from there every year. So right now what we're doing is we just did an intro to contract law course that teaches you the basics of contract law, how to deal with breaches, what are the four main parts of a well-formed contract, what situations you can get into where a contract may not be considered valid, what's the difference between a void and avoidable contract, they're two different things, stuff like that inside of that contract law course. As a certified lender or certified borrower, you must do at least one continuing ed credit every year. So just to keep it up and going. Deals is really the biggest part. We didn't do a huge number of changes to deals, but we wanted to do enough changes to make it really functional. Because it's a brand new site and it has been built from scratch, we're having a couple of things going on. First of all, there's some I think people are having difficulty uploading pictures. We're working on it. Just something that we're going on. So you're going to see folks without pictures. That's going to stop here in the near future. There's a couple of growing pains between the old site and the new site. Also, you may see people with a 0% interest, 0 months term. That when we pulled everyone over, we didn't get that information beforehand. So just want to let you guys know there's a couple of quirks to it, but those are going to be fixed here in the next couple of days. We're constantly doing updates. We just pushed a new one out last evening with a couple of bug fixes on it. So you'll see you'll see us moving in. It's kind of like moving into a new house. You want to make sure that the dining room's set up just right, and it may not be right, so you now have to redo it a little. So, yep. But deals we've done, the biggest thing with deals, and you saw Chris give this earlier, was a countdown on deals. So this specific deal here expires in about almost 5 hours. One of the problems we ran into with the old deal, or you run into it in a lot of sites, is people who will put a deal up and then not mark it as funded. And so we wanted folks and then kind of forget about it for a while. So we wanted the deals to be able to expire. They expire in 30 days after you have presented them. So that after 30 days after being up, they will expire. You can repost them. But this keeps the site somewhat fresh and clean. That way, then you're not getting a whole bunch of expired deals. So as I said before, we did also add interest rate, and we added the term in months to these deals as well. So I can go through and filter. I'll show you what those are in a second, because that's a big upgrade to the site. Reworked the look and feel of deals. Same information, just looks a little bit different. We now have the ability to add comments to deals. So instead of, like Chris was saying earlier, where I can go to the I'm interested, which will send a deal which will send a message specific to this deal. So that way then people will know exactly what deal you're talking about. I also can go in and leave a comment. Now, let's say I'm interested. You know that with, like, if I'm watching something on eBay, or if there's an eBay product I want to buy, and I can put on my watch list and kind of say, I want to see this, I want to see any updates on this deal on eBay. You can do the same thing here with Private Money Club. Right now, I'm subscribed. You can see that the little bell has a slash through it. If I click onto this subscribe, I will get a notification anytime anything changes on this deal. It's funded, closed, comments put onto it, anything changes, it all goes to my notification, so I can watch these deals as well to see what's happening. So if a deal might not be at a sweet spot, or it's just getting to the end of it's getting to the end of its expiration, I can be notified of all of those as well by subscribing to them. I also can favorite, and I can block deals or ignore deals. Filters are a big part of the newest version of Private Money Club. This is a brand new feature. I can filter by a variety of different things. So last week, I think, Chris, you and I were on one of the webinars, I think it was Wealth Wednesday webinar, actually, where you said, I have a lender's got like $65,000. They want to make like 12%, and they only want a 6-month term. So what we're going to do is we'll use that use case, dollar amount. It's going to be between 50 and 100. Interest is going to be between 10 and 20. And the period's going to be like 3 to 6 months. I can apply that filter, and now I'm only seeing deals with those criteria. So if you have a certain amount of money that you have to invest and you want to see the deals that fit that criteria, this is the way to go. I want to point something out here really quickly, and I want you to look at Thomas Mosley, I think that's how you pronounce it, Thomas Mosley's deal. You'll notice he's got a purple check mark on it. He's a certified borrower. So certified borrowers get a little extra kick on there saying, hey, you're a certified borrower. You know, this person has passed the certification course. They know what they're doing.
I know Thomas.
He sounds familiar. I don't know I can't picture a face. Well, I can see his profile picture, but I can't.
14% for 5 months, man.
Right?
Sometimes I got to stay away from this site. It's just as bad as bring a trailer with cars. It's just like, ooh, I want one of those.
I remember when you and Stephen went down the rabbit hole of bring a trailer. That was a fun day. I think you picked up 2 new Porsches.
Just one.
Sure seemed like it. When we were doing the work on this new site, we looked for other sites as inspiration. If it's working on another site, we're going to take a look at it. So that's where the countdown timer came from, was bring a trailer. But yeah, we had some fun times digging down those rabbit holes. That was great.
But the cool thing about deals, real quick on like that one, Andrew, is the ability to search. Let's say, I'll give you an example. Like, let's say somebody's got a corporate account that they know they're not going to need that money for 12 months from now. So you could go in there and you could search for that deal where it's only a 5-month deal. Now that's a 14% annualized rate, I would assume. But let's say I just want to put money out for 5 months. Like, I can search all the deals that fit my criteria for how long I want to lend for. That never existed in the old site, and that'll be really helpful because people have money sitting there for taxes or something else. Now they can kind of manipulate or move that money within the timeframes that they have. And then I would just make sure that a deal like that definitely, is going to be paid off, and that they have the means to pay it off in that time frame.
Exactly.
I love the search.
Here's the other thing on searches, though. If you're a Premier member, you get the ability to save these filters. So let's say that I always want to take a look at New York deals with 6 months terms on them. I can take a look. I can save that filter and then bring it back later on. So for those that do deals in different, like only will do deals in specific states or only want specific criteria, we can do that. You also can filter by a user. I don't know if you have any deals up, Chris, but we'll show you here. So I can go through and take a look, type a user's name, just a wee bit of their name in there, and only look for deals with those criteria. So that's something that we have as well. So just to think about it. The next thing, learning. So we have the lender and borrower certifications. We rolled those out last April, I think it was. On top of that, we do have our very first continuing ed course, and that is Intro to Contract Law. What I'm trying to do with this learning section for right now is I'm trying to give we want you guys to be as educated as possible. We want you guys to have a basic amount of information about how to deal with your money. Lazy money, we want to all get it moving. That's great. But what happens if you're not familiar with what a Reg D fund is? And if I said if we had a Reg D fund, you wouldn't know what that is. Or how do you use that in what are the specifics about it? So that's one of the ones that's coming up. I'm doing another one on syndications, just so you can get some more knowledge on exactly what they are. As a Premier member, you do have the ability you get 20,000 points of your annual. 10,000 if you pay. There's a monthly option now. You do have a 6-month commitment on it. But if you're a Premier member, you have the ability to get at least one of the 2 certifications. If you're an annual member, you'll get enough points to get both. Or you can get like a lender certification and your intro to contract law. You won't get the courses directly. You'll get enough points to purchase them. We wanted you to have the ability to make that to make that decision yourself. So let's say that you're always going to lend, you're never going to borrow. Why would you take the borrower certification? It wouldn't make sense. So instead, what I want to do is we could go on to the take lender certification and the intro to contract law. So just
Hey, Andrew, something super fun, because I love this. Like, and I'm still getting used to this stuff, but can I share my screen? I want to show them something really fun.
Sure. Awesome.
It's right on topic for what you're doing. So folks, this is my PMC profile. And you just go in, you go to your profile, and then you can see I'm certified borrower here. But also you can scroll down, you can read everything about me, you can see what my certifications are. But one of the cool things that we now have the ability to do is, how many of you use Starbucks app? I mean, I use it. I use it because it's fast, right? You don't have to pull a credit card out. You just scan it and it's point of service, plus you get rewards. So like right here, what I want to do is I want to buy, and what the heck? It was just over here on the right. I want to go into this and I want to buy something because I got points here. All right. So I got points just like I would in that. So I had it over here. There was an ad that was popped up a second ago. That was going to be way more fun. But I want to buy this Intro to Contract Law, which is a continuing education for the certification program. It was just put up. I have not yet done this one. So I want to buy it, but I want to use my points because I'm a Premier member. I was given points. So I just come here. I click purchase. You can see here's the cost, 10,000 points. I have 20,000, boom. And then I just go right to the course and I can start getting right into it. So like, I just think that's super cool because it's very fast. It's super easy to do. And I just got to use points that I had in there that I had accumulated by becoming a Premier member. And folks, that's not always going to be the case. Premier members will not always get 20,000 points, but people that become a Premier member, at least for now and into the near future, we're giving them that as a kind of a bonus. So Andrew, I just wanted to show that real quick because I thought that was super cool. We talked about it at Private Money Club's Money Tank, and then I finally just did it.
Perfect. Yeah, exactly. And so I did get a question in the chat there, and I want to address this really quickly, that if you had already had the certifications, yes, they will transfer over. If they haven't, let me know. So support at privatemoneyclub.com, and just let us know if they didn't transfer over. Transferring the data over from the old site to the new site was not a seamless process. It was a lot of wrangling a square peg in a round hole. So if there's something that's up with your account, so you were Premier, but you're not now. If you had certifications, but they're not showing up, please let us know. It's usually a pretty quick fix. We can turn it around relatively quickly, but just it's part of the growing pains of having a brand new built from scratch site. Is sometimes we run into these issues. So thanks for patience as we're getting as the dust is settling and we're getting settled into our new digs. But just want to let folks know it's not usually terribly difficult for us to change it over. You do not have to buy the certification again if you have already passed it. But let's go to events. So events are any upcoming events that are going on. So that's something that you can take a look at. I do want to go into members and explain this works a little bit differently than it did on the old site. The old site, I could see a list of everyone. We had some bad actors come in and spam, and we had some security issues with the old way we did members. So the way we're doing it right now is if you start typing somebody's name into members, we'll be able to take a look at them. As far as like finding out who are borrowers, who are lenders, go to the community for that. Introduce yourself, let me know who you are. Have a chat there, just like you would in any other, like if you went to a RIA and started to introduce yourself, what would you do? Let's say Stephen and I are at a RIA, I walk up, I shake his hand. Hey, I'm Andrew, get to know him a little bit. And then also, hey, are you a lender? Are you a borrower? What's your goals here? Inside of the introduce yourself, I think part of that description says, what are your goals for PMC? And the reason I asked that question is so you guys can get to know each other. So, but if I start to type let's see, Chris, do you have any deals on Private Money Club?
No, I typically just lending these days. I usually don't have any deals.
I figured to ask. We'll use Bo here because I know we were talking about him earlier. So I know he's got some deals up. So I'm going to show his profile so you can see what's going on here. Before I get into deals, I do want to show ratings. This is something brand new in PMC. One of the questions we got from a lot of folks was, how can I tell if somebody's a good borrower? How can I tell if somebody's a good lender? And as a platform, we really can't answer that question. There's just a lot behind that, but we wanted to give you folks the ability to self-police, if you will, to be able to self-regulate inside the site. So you now have the ability to review people. So if I go down to reviews and I can hit review and I can review him, positive, neutral, or negative. I also could put in some additional comments on any experience I have. If I review him, Bo can comment on, he can reply to this review. So that way, then if there's some additional situation that he wants people to be aware of, he can reply to it inside there. So it gives us the ability to review anyone. If you have already done a deal with somebody on Private Money Club, we do ask you, go in, give them a review. They would probably really appreciate it. So that we can get this review functionality up and working. Inside of his profile, I can see any deals that he's a part of. Okay, so it takes me to the deals section just for him. I can see his network, who is following him, who he is following. I can see any certifications he has, even expired ones. I can see any courses he's taken. I can also see any posts he's made. So I can see everything about him. So I can get to know him a little bit better as I start to figure out, I'm going to follow him just because I've used his profile a couple of times today, figure I'd give him a follow. Chris, I was telling somebody earlier today, I feel like MySpace Tom, because there's so many people who've gotten so many follow requests. You have too.
MySpace Tom.
I feel like MySpace Tom. There's a flashback from the past. So yeah, go ahead. Definitely like all of it. Definitely follow all of us, Stephen, Chris, Snaggy, all of us. Yeah, that way you'll learn how to do that. I want to go into my profile. I think I have deals up, but I'm not sure. There's some functionality to deals that we have that we implemented. They were supposed to be implemented on the older version. It did not work well, so we completely rethought it and just did them. These deals here are expired, but I wanted to show you that's why they're inactive. But I wanted to show you the functionality because it works the same way. I can mark deals as funded by clicking this button here, and that'll put a little funded tag on the deal. I can also go here and it'll instead of saying republish deal, it'll say close deal. And that's the way that I can pull it off of Private Money Club. I can go and take a look in deals, all closed deals. So you can see if, you can see how many deals closed at like 100,000. It gives you a little bit better idea for, it's like pulling comps, if you will. It's kind of like pulling comps on Private Money Club, seeing what other deals have been closed. Repost will open this deal back up again and repost it. I can also go in and edit. So this was functionality that was not available on the original version of Private Money Club. And so now we do. That was one of the things we got was there's a lot of junk deals. Now this will help that. And expirations. Let's see what else I've got in here. Payment details. I can also click on this and go there as well. This is where I buy more points. If you're a Premier member, you get 10% bonus on top of everything, even the package bonuses. I can take a look at my purchase history. If you're a Premier member, we're a special kind of Premier, so we don't have an account link to us, but you'll see your subscription down here and where you're at. And when it renews, you'll also see the payment method that's on the account as well. So that way you have a lot more transparency as far as when renewals are going to happen. If you are not Premier already, you can sign up from here and just go through the process and sign yourself up. So, a little bit more transparency as far as the information that you have and just making it easier to see, your payment history, things like that, all inside of Private Money Club. And then messaging, we redid a little bit. It's now a little bit easier to use. You can put multiple people into a chat. I can give a subject to a chat as well. Once I start typing results, I'll start seeing people in here. So I can go and take a look and post messages. It's pretty straightforward. You're going to see PMC partners on here. This is coming. We're not quite ready to roll it out yet. There's still a couple of things we need to work out, but you'll start to see companies like with Corporate Capital, ancillary companies that'll help you to do your job will show up in that section. I haven't really been looking at the chat at all. Have you guys, any questions you guys want to call out that we need to check up with?
Hey, I'm just monkeying around over here and kind of, I'm putting up a post in the community in the group section. Like in the content part, would it be possible to copy and paste something and then paste it into the content part, like an image? So down here in the content section, like, because I'm putting one up right now. I'm doing a post up for it right now. But I would want to, I want to copy and paste a picture. I'm just online. I want to copy and paste a picture and put it in the content part without having to save it to my computer and then upload it as an image. Will there be functionality that allows me to just put random photos in there?
We're looking at that in the future. It's a lot harder to implement than it sounds. And we want to do it right. And so right now what we're doing is just attach images and documents this way. That is something that we're looking at in the future, though, is to make this a little bit more seamless. Sometimes, we take one step at a time. Yeah, it's a little bit harder technically to implement. We want to make sure we get it right because it wasn't right in the old version. So, yep, yeah. Yeah, this current version that we have right now, the main reason we did this big upgrade to Private Money Club is because the back end of Private Money Club we outgrew it a long time ago. And there were a lot of bugs and a lot of issues and a lot of functionality problems. So what we wanted to do was to give you guys a site that works better, that's faster, and then put out a few extra things. So just for the time being. Now what we're going to do in March, though, is a much bigger rollout. So that's going to be the big rollout when we do a lot more functionality for it. But for the time being, we just wanted to give a couple of things, either things that weren't working or things we thought would be a bigger value add, like community. Reworking that was a big value add. So it was a priority for us. Just a thought on it for you guys. So you're going to start seeing, so that's actually really great feedback, Chris. And I'll make sure that gets into our list of things, our list of upgrades that we're going to be doing. But I also wanted to give you an idea for kind of why we're doing it for right now and why sometimes we'll implement something that's a little bit different than it will be in the future, just to make sure it works. So, yeah, that one, we tried it at first and it ended up just being a bit of a mess. It was not going to meet our quality standards if we were going to release it. So we said, we're going to do this right now and then wait until we can actually properly implement it.
Boyd's got another feature request. We all have feature requests. Andrew's getting bombarded, but we're just trying, because we just ported this site over. We got lots of little bugs that we're fixing. None that are big, but just little stupid things. So we're trying to get through the bugs and then it's feature time.
Yep. Yeah, and there are, I noticed Chris texted me while we were in the middle of this going, so what's up with deals? I actually already submitted that and said, yeah, we did an upgrade last night. It may have messed with deals a little bit. So I've already escalated that one. They're going to take care of it. The little pings you hear in the background of the developers telling me what's going on. So yeah, we're constantly making little bits and changes. And I know mobile, there was some issues last week, late last week with the way that things are formatted on mobile. We do have those fixed. We fixed them on Monday. So yep, we're kind of settling into the new digs, making sure everything's going well, just doing our thing.
Yeah, they're all just dumb little things, like nothing that really inhibits the use of the site like it was when we first launched it almost 3 years ago, essentially. That was a mess. But Tarina, you're asking about lending and borrowing opportunities for international. That's definitely not ready yet. There's lots of international laws on how that works, but all I would say to that is someday, I won't even say next year or anything, I would say someday we would do that, but we'd have to probably partner with an international company that's facilitating that already. So that's a heavy lift, and we've got lots of other cool stuff that we have to get done before we start doing anything with international deals.
So actually, and Shane wrote this only to host and panelists, so it's not going to show up in the regular chat, but he did bring up a really good thing. He says, I'm in the state of Colorado. So it used to be there were 16 states we couldn't operate in. We've gotten all of that worked out, except the state of Colorado. And I think, please correct me if I'm wrong, but I think you can't lend or borrow at all in the state of Colorado. That's a state that we ended up having to block almost entirely just because of the laws in the state of Colorado. We're currently working on it and trying to work out. We have one of the top law firms as our counsel, so we're currently trying to work that out, but that is the one exception state. So anything inside of Colorado is going to be difficult because we are having some growing pains, because we're kind of we have a couple of errors that are coming up. I call them that if you don't know why I'm mad at you, I'm not going to tell you errors. And it's usually just error. We have a lot of little stuff like that that's going on. So I am doing open office hours tonight at 5 p.m. Eastern. We'll do it for an hour tonight, and I'll do it for an hour again on Friday. Let me post the links on here so you guys have it. And then so that way you guys can join me. I'm going to try to get into as many questions on these office hours as I can. If we can't get to everything within about the hour that I have scheduled, we'll do some additional sessions like this. But it'll at least give you guys the ability to, if you're having a weird question, like I click this button and my shower turns on, or some other strange thing that's going on, we'll try to help you the best we can through those sessions. So doing 2 of them this week. I'll put them into the chat so you guys have them. But just wanted to let you guys know that we're doing that. I'm going to get them in right now.
I love that. Office hours, Andrew. Such a cool idea. Such a cool name. But with that being said, folks, as we wrap up this awesome session of Wealth Webinar, a little bit of mathematics for y'all, a little bit of PMC for you. But the one thing I also want to let you all know is outside of office hours, which is today, Andrew's going to put that in there. We also have Ask Me Anything happy hour, as always, at 4:30. And if you want to be part of the Ask Me Anything happy hour, super easy. Just make sure you're subscribed to my YouTube channel, which is at the Chris Naugle, or join us on Facebook or Instagram, and we will be streaming from all of those. And that's a cool place where you can ask any and all questions to an entire panel of money mentors and folks on our team. So with that being said, Stephen, you want to bring us home?
Hold on, before you go.
I know, we got the experience, man.
Yes, I want to invite everyone to the experience. So a lot of talk lately, snow's starting to come down. We're all getting stoked about snowboarding, going out maybe to X Games, but we want to invite everyone to hang out with us, go snowboarding, hang at the spa in one of the most beautiful places in the entire country, which is in Sundance, Utah. So we're gonna be out in Sundance in February. We want to invite a handful of people. We limit this to 25 attendees. We've been doing the experience now for several years. We've been to where have we been on this thing? We've been snowboarding in the past. We've been to New York a couple of times, been to Mexico. We've been to Vegas. We've raced cars. We've zip lined. We've done all kinds of crazy adventures. So the next one's going to be in February, and really looking forward to it. So if you ever wanted to snowboard, hang out with us for a few days. We're going to bring in some other really cool people to be there with us. So we want to invite all of you. There's still time to get on like a 3-month payment plan if you wanted to kind of break it up a little bit, that kind of thing. We got some really cool different deals going where you can bring a guest with you for reduced cost, stuff like that. But get yourself out there. There is a room block, so you can book the room that you want at Sundance at a discount, but it expires in January. So just want to make sure that people are planning this, getting set up for it, getting their travel done. But it's going to be an awesome event. So just want to make everyone aware of that. We'll start talking a little bit about that. But lock it in for yourselves before it sells out and before the bookings goes away. Fair enough?
There's no way this one won't sell out. I mean, the Sundance experience events are some of the most impactful events that we do. So 25 seats. If you're going, you're going to have to get your tickets quick, because we got horseback riding and zip lining and all sorts of stuff. We have very limited numbers of people that we can accept, and we will cut it off at 25. Stephen, you want to put that link in there so if anyone's interested, they can grab it?
And the experience is probably one of my favorite events, because it's just like, come hang out with a bunch of people that are super smart. We're going to go do some cool stuff with our friends. So I think out of any of the events, I like all the events. I think that was my favorite one. We always do it at a cool event. We always do it at a cool place.
Well, we're not stuck in a ballroom all day. We're out enjoying it and hanging out together and really building relationships. So that's what I love about it. And
I'm going to say one thing, the owl. If you know, you know. If you don't know, get your ticket and you'll find out. The owl brings it all home every single night. With that being said, folks, thanks for joining us for another episode of Wealth Webinar. Really appreciate you being here, and we will see all of you on the next webinar this afternoon. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.